how best you can remember, the concepts that you covered. Now, just a very slight reminder, because whatever we want to do in this question number 22 of April 2023 is something that is not difficult. It is very easy with the right concept. If you have the concept in mind, I tell you guys, it will be a very easy ride. Now, I want us to remind ourselves of the concepts. Now, I just mentioned that in this management accounting paper, remember it is now compulsory. Initially, it was optional, but now it is compulsory, meaning you have no choice. Besides financial accounting or FRA, and besides financial management or AFM, you also have this other brother here, management accounting. No choice, compulsory. Good. Now, the areas that we need to know about management accounting, to the moment, I believe you've already known. We're just reminding ourselves that make sure you know the concepts in CVP analysis, because it is very important and it is one of the areas that you are likely to get a question from. Now, the second area that you also have to align yourself with is how to run regression analysis. And regression analysis, this one now is the simplest part, and it is the part that started, it was the pace setter for the BDA paper in the management accounting area. From December 2022, this was what started it. Then now when they went to August, they went to another area. In December, they came back to this. And that has been the trend. They've been repeating the same area. And it is a very, very interesting area, which you should pray. You should pray that they bring to you regression analysis, because if they bring that, all RECM students will get all the marks in management accounting section and you will all pass in Jesus' name. Now, this regression analysis, this is where you are using the tool pack. This is where you are using the tool pack, which already, I believe, all of us here in this meeting, you've already activated the regression analysis tool pack and you have it with you. And that is the tool you use to run regression analysis. Good. Good. Then the third area, which you need to also, is a major area which you have to align yourself with, is an area of budgets. And we know, when you talk about budgets, your mind should already think of two areas. You need to think about cash budgets, and then you also don't forget there is this other sister called flexible budgets, because the sister is very flexible and you need to know how to flex a budget. I believe you've learned all these things, and this, what we are doing, is simply a reminder. Yeah, we are not learning for the first time. It's just a reminder. Make sure as you prepare for the exam, which is either 2 weeks away or 3 weeks away, remember that regression analysis has been said several times, but that does not mean it cannot come again. Examiners are very tricky. And again, make sure CVP analysis, break-even point in shillings, in units, and all the other concepts around it. Then budgets, remember, you know how to flex a budget. Cash budgets are normally very direct, but do you know how to flex a budget? A challenge to you. Now, having reminded ourselves that, you need to remind yourself out of this. I'm just doing random reminder, because we are not learning it for the first time. Random reminder. Make sure when you talk about CVP analysis, make sure that there are those notorious areas that examiners normally like bringing. Notorious areas. Remember to remind yourself on how to get break-even point in units, which I believe you already know. It is something that you just make sure you have it at your fingertips, because it might help you on that rainy day. Remember that formulas can normally be refreshed and framed in different ways, but we need to know that break-even point in units, usually the easiest approach is total fixed cost. You divide total fixed cost by the contribution margin per unit. Contribution margin per unit. You can reframe it in either way, but this is the pace setter. This is the line through which you can remind yourself with it. And you need to know, how do I get contribution margin? Contribution margin is normally what? You know. It is S sales minus the variable. We're just reminding ourselves that things you know. Then you also don't forget, let me just expound more on the contribution margin. Contribution margin, that is the CM connotation. You know, this is revenue. Revenue, sometimes you can call it sales. There is no problem. Total revenue. Let me just even put the word total there. Total revenue. And you know, total revenue, what you deduct there is variable cost. But now, because we are talking about total revenue, let us also talk about total variable cost. Total variable cost. Let's use the total figures. That is how you get this contribution margin. Remember, I'm using total revenue and total variable cost. And when I was talking about contribution margin per unit, it is sales minus variable cost. So I believe you know how to balance off those variables there. Then you can also reframe this contribution margin a different way. You can also say that contribution margin, you can say it is, for example, selling price per unit, selling price per unit, selling price per unit, then you deduct variable cost per unit when you talk about per unit. So that one also gives you a way through which you can be able to maneuver and get your contribution margin per unit. So I'm just putting it there for somebody to remind yourself and make sure you don't forget. That's a very, very important section. Then, how do you remember about break-even point in shillings? Break-even point in shillings. Break-even point in shillings, just a reminder, we also still go, we use the same formula, the same approach we used in units here, and it is the total fixed cost. And what are we now dividing it with? Remember, this is now in shillings. You know, this is now contribution margin ratio, CMR. Now, how do you get the CMR? How do you get the contribution margin ratio? How do you normally get it? I believe you now know how to get the contribution margin ratio. It is just the contribution margin, and then you divide that by revenue. But you can as well rephrase it in a different way. You can still say contribution margin ratio to make it maybe appear a bit different. How do you get contribution margin? Contribution margin is total revenue. We are just dealing with the numerator. The numerator, we just said it is contribution margin, but you can go ahead and break down that contribution margin further. And you know, contribution margin is just total revenue minus total variable cost. That is the same as contribution margin in this other first approach. Then now, in this case, you now introduce a bracket to mean that we are dividing all that you are getting by the total revenue, like that. It is the same, but we're just now breaking down the numerator. The same thing like that. Good. Now, as you do all this, as you remember these very simple formulas under CVP analysis, because they will help you from this, they will help you. But remember, when doing management accounting, when working out the break-even points, the contribution margins, and the contribution margin ratios, remember, at one point or the other, you might be required to use goal seek, you might be required to use scenario manager, you might be required to use data table. And again, the solver functionality will come in handy. The solver functionality, when you go to your data tab, under analysis, solver is also an analysis tool. Solver is an analysis tool, which I believe up to this point in time, you know how to use it. It will also help you as a sensitivity analysis tool to go about some of these concepts. Good. Now, before I even go further, because I know there are a lot of things about management accounting that you've done, but it is also very good to remember. Remember, apart from the CVP analysis that we've talked about, generally, when you talk about management accounting, generally, you know, we are talking about costing. And we know up to this point that total cost is usually total variable cost, and we add the total fixed cost. That is a very, very simple formula. It looks very simple, but if you have it at the back of your mind, it will help you. And you know, from there, when you talk about cost, you should not forget that cost is a determinant of profit. And we know that profit is total revenue. We normally deduct the total cost. Now that you know how to get total cost, you know you can arrive at profit because it is an element affecting profit. Then we also need to remind ourselves that at any break-even point, we need to know that at that point, when you are breaking even, you are not making a profit, you are not making a loss. Meaning what? Your total revenue that you are generating is equal to your total cost. no profit, no loss. This is at break even. Yeah, and at that point, profit is 0. Yeah, and I've given you the break-even point in shillings. You can always compute that with this kind of approach, which you already know at the back of your mind. And this is where sensitivity analysis tool will come in. If you want to get any variable, if the examiner tries to hide any of these elements, but with the knowledge of a break-even point, you can maneuver your way using the sensitivity analysis tools I've just mentioned, and you will be good, home, and dry. Now, let's come to regression analysis in relation to this our question that we are supposed to do here. You see this question we are supposed to do. I'm telling you it's a very simple one, and this 20 marks, you can pocket so easily. In less than 10 minutes, you shall have already pocketed this. Less than 10 minutes. That's why I'm not even worried about this time, because what we're supposed to do here is very simple. I'm just reminding you of important concepts that we must always have at our fingertips, because we will need them. Not so long from today, we will need them when you'll be alone and you might start sweating from very wrong places. And when you start sweating from very wrong places, especially if you are, at this level, you're a grown up and you start sweating in an exam room, it might not be very nice. It might not be very nice. It might not be very nice. So now, when we talk about this question that we're supposed to handle, this one asking us about plotting a graph. Now, this graph that we're supposed to plot, we are told it is price against time stroke dates. Even before we continue reading the other section where we are told to insert a linear trend line graph, we need to ask ourselves from this statement alone, when you see anything telling you one variable against, that variable coming before the word against, you should know where it is aligning. Is it a y-axis? Or let me not talk about y-axis or x-axis. Let me talk about dependent variable and independent variable. After the word against and before the word against, you need to know already which one falls under dependent and which one falls under independent. And because we are talking about a line graph, a graph has a y-axis and an x-axis. So you need to know which one between price and time or date, which one goes to x-axis, which one goes to y-axis. That is something that I believe should not be a problem to any of us in this meeting here. And in relation to that, these variables we are talking about here, let us remind ourselves that in regression analysis, regression analysis itself is a statistical method, and it is a method which is being used for cost estimation. Yeah, you are estimating the relationship between dependent variable and either one or more independent variables. Remember, dependent variable will be one. Dependent variable is always one. And independent variables can either be one or you have many independent variables, because they affect this dependent variable. The variable which is dependent is only one, and it depends on either one or a range of other variables. And up to this point in time, when you mention about that interdependence or that relationship, you should already have examples in your mind. Yeah. So now, when we are looking at this relationship, this is where they came up with a linear regression equation, which will help us assess this relationship between the dependent and the independent variable. Yes, and this simple linear equation, which we can also call simple linear model, and it normally is being expressed up to this point, I believe you know it. It is normally being expressed as y is equal to a plus bx. A plus bx. Let me put this one in small letters. A plus bx, like that. These are very simple linear equation, regression linear equation. And we know that when you talk about y, this is what is depending on the other variables. So that's why we normally call it y is the dependent variable. Very important reminder. I know you've learned them, but like I said and I repeated, it is not about have you covered it. It's okay, you've covered, but do you have it? Do you have it, so that whenever someone even meets you along the way and asks you, explain to me this linear regression equation, what is it all about? You understand. That is what is important. That's what education is. What remains after you've forgotten every other thing? Good. Now, why is the dependent variable? It depends on A, and you can see A is constant. It does not have any other element that it depends on, but it is a determinant of the Y, which is the dependent variable. But now when you come to the bx part, now that is where we were talking about either one or more. So that tells us what? Y is the dependent. But then when you talk about the x, which is next to b, this x here, x which is next to b, it represents what? That x is now the independent variable. It is the independent variable. But then that x is tied to b and then a. Let's not forget about a. Let me come to a first before I go to that other section of b so that we see what b represents. Now that a, it stands alone and it is normally the y-intercept. It is normally the y-intercept. And as a y-intercept, when we talk about costs, we should know and remind ourselves that as a y-intercept, normally this one is what represents fixed cost. I'm just putting it there, but I put it in a bracket. And I believe that now that you've covered this one, you remember it very well. Then now B. That B, which is tied to X. X is in an independent variable, and the B is the slope. You can call it the slope, or you can call it gradient of the graph or of the curve, like that. So that reminder is important so that we know which elements, which independent and dependent variables are we talking about in that section. Now, all of us, we now have the analysis toolpack for the regression analysis. I believe we have it. And when we look at this from this linear regression equation, this simple linear regression equation that I've just mentioned here, you realize that in cost estimation, there are various methods that you can use to do cost estimation in relation to this linear equation that we've just mentioned here. When you are doing cost estimation, because that is the basis, when you're doing that analysis, at some point you are working with estimates. When doing cost estimation, there are various methods that you can always apply when talk about in relation to the linear equation. In relation to this equation, these methods are normally coming up, and one of it is the regression. Regression, of course, this is the basis of what we started talking about, this regression method, using the analysis toolpack that we have there. Then, in regression, in relation to this linear equation, you also remember that there is high-low method of cost estimation. High-low method, which I believe you also come across what a high-low method is. Then also don't forget, there are also some other methods of cost estimation, and I believe you must have heard about scatter graph. Scatter graph method is also a cost estimation method, scatter graph method. I know there are also some other non-linear cost estimation methods. For example, there is something called learning curve, which it is not within the scope of the BDA coverage, so don't worry about it. The learning curve, it is a non-linear method, but here we are simply restricting ourselves to the linear equation. The methods that employ the use of the linear equation to do cost estimation. Regression method, high-low method, scatter graph method. So this one is the scope of BDA coverage. So you need to just look at these cost estimation methods and have them at your fingertips, though there are also others. There is also another one called accounts analysis method, but that one is also not within this scope, so don't worry about that. Now, let's go back to this our linear, this cost estimation function, y equal to a plus bx. That is the cost estimation function that we have there. And in this case, this one has only one independent variable. One independent variable. You see this x is our independent variable, and in this case it is only one. But it will not always be one. You can get an independent variable like we've just mentioned. I just mentioned to you that when you look at this equation, when you talk about the independent variable, it can either be one or more independent variable in the definition of regression analysis. So where you have a cost estimation method with more than one independent variable, sometimes it can be expressed in terms of y. If y equal to a, we know what a is. A is our intercept or the fixed cost. Remember, this one do not change in this equation. So it is a plus, we start with now the slope b, but now when you come to independent variable, if there are more than one, you'll have, for example, now x1, and then you also talk about, for example, now bx1, and then talk about, for example, cx2. CX2, where now X1 and X2 are the independent variables. This is a case where you have more than one. So in this case, A, B, and C, we call them coefficients. A, B, and C are coefficients. A, B, C. These ones are coefficients. We're just reminding ourselves. Now, after knowing that those are coefficients, now, what is X? When you talk about now X, X1, you might be having X2, you might be having X3, and all the rest. They might be so many. What do they represent? These ones are just the independent variables. It is just good to always remember you can get a range of variables, of independent variables. Then, of course, our Y still remains the same. Our Y is just the dependent variable. Now, let's look at that our question that we were doing, and we relate with this knowledge that we've just had here. Remember, I've talked about intercept. A is an intercept. And this is a y-intercept. Remember, it is a y-intercept. And at y-intercept, this x, which is the independent variable, will be 0. But that one is something which is well demonstrated using a graph, so we'll get there. I'll not talk about high-low method and scatter graph here because I know you've covered it. But remember, as we maybe hunt for other questions in the same area, we will get a question around this and we will see how to represent the high-low and scatter. And they're well represented when you see them in details. Now, let's look at this question here. Now, we've already talked about the variables. Someone tell us, someone remind us, between price and time or dates, which one is dependent, which one is independent variable? Which one is dependent, which one is independent? Guys, we're reminding ourselves, guys. Ah, Tekla, what are you saying? You only did regression, okay? You only did regression. No worries, do not worry. Even if you've not done yet the high-low and the scatter, you'll do them, don't worry. Don't worry. There is still time. I was just mentioning them so that you know the scope, yeah? So I was just mentioning this cost estimation method so that you know the scope of coverage when you talk about the linear regression equation, because they all rely on this equation. This equation is used in all those 3 sections of cost estimation. So worry not, worry not. Now, no one is speaking to me. Between price and time or dates, which one? It is price against.
What's the question?
Which one is in y-axis and which one is in x-axis, if I can use the simple language? Yes?
X-axis is going to be the time,
Yes.
and the y-axis is going to be the price.
Correct. Correct. That is very simple like that. Price is dependent. Good, 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 good. Price is the dependent. I think that one is something we all understand. So when you talk about price against, that price, that first variable that comes before the word against normally falls in the y-axis. Yeah, it normally falls in the y-axis. And that is our dependent variable. That is our dependent variable. In other words, that dependent variable, you can call it total cost. If you want to get a very direct correlation. I know someone will even ask correlation. I want to try as much as possible to use very simple terms. When you want to talk about the relationship and you want not to forget, because remember when I mentioned on intercept, I said there intercept
Remo,
can also
check
use
on
it
your
to
internet.
represent fixed cost. Yes? Yes.
Check on your internet because the breaking up is so persistent.
Oh, it's breaking. Oh, this is okay. I don't know. I don't know. Is it so bad? Is it so bad, guys?
On my end, it's clear.
On your end,
Okay.
it's clear.
It's not that bad.
It's
Only
not that
it's
bad.
manageable. Let's continue.
We continue, right? So
Yeah.
let me believe that it's going to stabilize so that you can get me clearly. I believe it's going to stabilize. So now I want us to now start, and I wanted to just give you a relation in terms of costing with this dependent variable and the other independent variable. So why you can let it represent, for example, total cost. I just mentioned to you the A, which is the intercept, the y-intercept to represent the fixed cost. So A, we can use that A to represent fixed cost, like I've just mentioned above. Then when we talk about the B, which is the slope, that one normally remains constant, and in some instances, we can use it to represent variable cost per unit, but that will come later when you're doing now the cost analysis. And now when you talk about the independent variables represented by X, that's where we talk about either the cost driver. This is the cost driver, or sometimes we can also refer to it as an activity level. An activity level. That is the B, which is the slope. B, which is the slope. And then that, not B, sorry, this is X, which is the independent variable. You can maybe, in some other areas, you can call it's an independent variable, it's a component, and we can call it a cost driver or activity level. And then that B can be used to represent variable cost per unit. Now, I'll just leave it at that because we can open up a lot of discussions about the same, which I don't want us to digress a lot. Now, let's go and answer this our simple question here. Now, let us plot this graph for price against time or dates, and we are required to insert a linear trend line displaying the equation and R squared on the chart and briefly discuss the results. Now, how do we represent that so easily? How do we represent that in that chart? We've already identified the variables, so that makes our work so easy. The variables we've identified is price is on the y-axis, time is on the x-axis. And remember, we have three elements here. We have date, production, and price. But now we are not going to touch on production. Production is not required in this our chart. We are only required to represent date and then the price. But no worry not, we want to highlight the whole thing. We want to highlight the whole data, then go to insert. What are we inserting? We are required to insert a graph, a line graph. So I will come here and go to the line graph. I'm just going to the line graph section directly. And then we can choose any line graph here, any of them. This is stacked. This is that. So I can choose any of them. Let me just even choose the stacked. It's okay. I can even choose that stacked line graph. It's okay. Because the examiner gave us, the examiner gave us what he wants us to use. He said, plot a line graph. That's why I've chosen on line graph. After I've chosen that, you can see what is aligning in the y-axis is the price. And then in the x-axis, it is the production and price per kg. But then we don't need price. We don't need production. We only need price and the date. So I will come here to select data. Then I remove production. So just come and remove this production. You see production, it's not part of our graph. So how do you remove it? I will just highlight it and then click on remove. Then it goes so that in the y-axis, I only have price. X-axis, I only have the dates here. Then I just confirm by saying okay. I confirm by saying okay. Where did our graph go? Our graph decided to disappear. It decided.
Mwalimu,
Yes.
chat designer umetoa
Sorry?
kuju. The chart, that their chart design,
Yes.
where have you gotten it from? Sina kwa nini yangu.
Are you seeing it is a tab written chart design?
Yes, I don't have the tab.
Go to insert. When you click on insert, and have you already inserted the line graph? Have you already inserted the line graph?
No,
You have?
no, not yet. No, I have right now.
You already have the line graph.
Data range and location range.
I wonder why you are talking about ranges.
Hiyo ndio imeniletea.
No, the first thing you need to do is to highlight the data that you want to represent in a graph. Have you highlighted the
Okay,
data?
which I have.
When after highlighting the data, go to insert.
Yes. Okay.
When you go to insert, then now choose the type of chart that you want to insert. Have you done that? Have you?
Now, which one do I choose? The line.
The examiner wanted us to use the line, so that is what we choose. Choose the line graph. If you read the required part, it is saying plot a line graph. So it is very specific. Very specific, it is a line graph. Have you inserted it?
Well, if I go to the line chart, it brings me the option of data range and location range.
Wow. Are you able to share your screen very fast? Are you able to share your screen very fast?